Hello, everyone, and welcome back to Sudden Wealth. I hope you guys are doing very well. The week is approaching its end, and I do hope you have some good plans coming for the weekend. If you do enjoy the content, please consider dropping that like and subscribe. As you guys know, it greatly helps the channel. We've crossed the 1,220 subscribers, so thank you very much. Next month will be 1 full year since I started the channel, so it's been already quite some time. Time really flies. But thank you very much for staying with me and for all the support. Going straight to the meat in the bone, let's say. Yesterday evening, I've showcased a few of my lottery ticket plays. Some of them are doing quite good, like 40, Book of Ethereum, of course Andy, but that one is a bit of an older one. Brett, one of the Bretts on Ethereum. Hoppy starting to show some signs of life, and also Bird Dog. So all part of the same, Pepe universe kind of mentality. And I do think they will probably do very well, particularly because Ethereum has yet to have its major pump. Solana already had it, and we've seen how meme coins did on the Solana ecosystem. They did extremely well. But Ethereum is still to pump, and I do believe that by August we will have the Ethereum spot ETF approval in the US, which should be very bullish in the longer tenor. Now, yesterday evening we had the FOMC meeting. Basically, Powell has kind of given the hint or disregarded the rate hikes possibility, which is what the market wanted to hear. I've mentioned this before. I don't think it makes any difference about inflation numbers if they come hotter than expected. Now the job market is finally showing. I mean, if you actually look at the job markets, it's always been bad, okay? And the thing is, if you look at the headlines, oh, we've created more jobs than expected. Yes, but if you actually go into the report, you'll see that the vast majority of jobs created were part-time. Full-time jobs are actually decreasing, which is bad. A huge percentage was government jobs, which are non-productive. And a great part of those jobs being created were people taking second and third jobs. So there were people who were already employed. And the reason why they're doing it is because the economy is bad. But now, finally, the headline numbers are starting to reflect what the inside of the report numbers was always reflecting. And you need to understand this about the media. The media is a narrative. The narrative serves the purpose that they want to achieve. In this case, get Biden reelected. I'll give you this example. On the Financial Times today, there was an article saying, Powell dilemma. The U.S. economy is far too strong for rate cuts. So what is the implied message here? So this is the narrative. The narrative is, I always talk about narrative versus fact. So this is a perfect example. U.S. economy is too strong for rate cuts. The implied message is Biden and the Democrats are doing such a great job that there's no room for rate cutting because they've done so well. So this is the narrative. The fact: Biden has the lowest approval rate in the last 70 years. So pretty much ever since there are polls about approval ratings of presidents, Biden is the worst of them all. And one of the main reasons, the main reason why he polls so badly is because of the economy. Narrative: the media is trying to tell you that the US economy is super strong. Fact: Biden has the lowest approval rating due to the economy of all time. You see, again, this is very important for people to understand, because it doesn't matter if these reports come stronger and stronger than expected. People are telling you the real state of things in an economy. Okay? Now, what we've been seeing in the past few months has been a cooling off of a very strong start of the year. As I've mentioned before, we were starting way stronger than your typical bullish year, not even your average year, your bullish year. So we've had a bit of a relaxation. And what the market wants to hear is no more rate hikes, stopping QT, and the Fed will stop QT, and they will cut rates. Now, I don't know what's going to be the reason why they're going to do it, or they're going to say they're going to do it, but they will do it. And the reason is very simple. I've mentioned this before. If they don't do it by 2028, 2/3 of the entire tax revenue in the US will be used to pay interest, not the principal, on the US national debt. So there's no way you're going to do it. So if I can see this, the Fed also sees this. And the funny part is that when they cut rates, I do expect the dollar to tank. And what's going to be funny is actually after maybe 2 or 3 months, inflation numbers will be lower and lower, and everybody will be super surprised again. Why is inflation going lower despite Japan is showing that for 30 years, despite 15 years of the ECB and the US printing money and lowering interest rates nonstop and having average inflation of 1.6 and 1.1%, and despite China printing money nonstop again, and they're facing what? Deflation. But it doesn't matter, people forget, people don't remember, I don't know what the case may be. 2008 was the same thing. Everybody thought when the Fed started printing money, which was at the time, pretty much unprecedented to that level, gold shot up, thinking that we're going to have this massive inflation, and then inflation numbers are coming low, and then gold goes from 1900 to 1050. Why? Because we didn't have inflation. So, to me, it's still a surprise how people don't grasp this after so many examples throughout the planet for so many years, and in the case of Japan, 3 decades. But, people need to learn the hard way again, I guess. Now, when it comes to stocks, they are bouncing a little bit. They're still strong. As I've mentioned, as long as the Fed keeps on increasing money supply, there's very limited risk on the stock market. Can it go down 30 or 40% like 2022? Sure. By the end of 2023, we were at all-time highs. And the reason is money supply is increasing, money needs to go somewhere, goes into stocks, crypto, and the likes. Now, when it comes to crypto, we've recovered a little bit on Bitcoin. We were actually down in the morning, and we're now a little bit up. We are approaching 60K mark. I still think we're going to see the 47, 52K levels, as I mentioned. I'm not saying it's going to stay there for a long time, but I do think we're going to still see it. But we do have bounces and going up in the middle of the cycle. Now, what if we hit 57 or 56 point something and that was the bottom? Fine by me. I'm also okay because I'm already positioned for anything. So to me, it doesn't really matter, those little minutiae in terms of details. Now, what is relevant to highlight is that the SEC filings have shown that the second largest bank in Europe, which is the French bank BNP Paribas, has bought BlackRock's Bitcoin ETF. Now, it bought just a little bit, something like $40,000, so it's nothing special, but it's showing a sign that European institutions are starting to experiment with ETFs in the US, which was obviously the whole point of the ETFs from a pricing standpoint, is that it now allows institutions and players that very recently didn't have access to that market because they are forbidden from touching certain financial instruments. Now they can have access to it. So that's pretty much it. The big influence. Now, once again, I don't get locked on these small price movements, daily price movements. I think it's a big mistake. I think people, the more they look at the charts, the more mistakes they are prone to make. My view, this is what I'm thinking, 2025, April 2025, if we do explode completely in 2024, then I need to look at things a little bit more careful. But other than that, have a longer term horizon, think about the narratives, think about why we're invested in certain things, and don't waste time on every single chart, day, hourly charts. My God, there are people who look at 5-minute charts. I think that's a big mistake, but you guys, if you do want to do it, it's up to you. But I really discourage that kind of behavior. And yeah, with that, I don't think we are out of the woods yet. Maybe we are. I don't think so. But maybe it's going to be a positive surprise for everyone. I do expect us to still sell off a little bit more, which in my view, once again, is bullish. Touch those levels and move forward. Maybe I'm completely wrong and you guys can destroy me in the comment section if nothing happens by the end of May, early June. Give me until the 10th of June, okay? And with that, guys, I leave you be. Thank you very much for your support. I'm really trying to broadcast a bit more often. Next week I will be traveling for business, but I will try to upload the videos in any case. But probably I will upload them something like, from this side down, because as you can imagine, traveling with a mask like this may trigger some unwarranted questions. And with that, guys, I'll leave you be. Thank you very much. Drop that like and subscribe. And I'll catch you in the next one.